Have you been ghosted by investors? Discover in today's session how you too can attract money from investors in venture capital in today's episode with Mike Schatzman. Mike Schatzman is the founder of Venture Forward Capital, and he helps visionary founders build their companies from the ground up. He's a VC advisor and emerging fund manager, and 3 times exited entrepreneur, board director, and restaurateur. So, Mike, please tell us, how can entrepreneurs start attracting capital for their startup?
Welcome to Awakened Titans podcast with Lily Patrascu. Mind-blowing conversations with influential business titans sharing how you can manifest abundance, love, joy, success through quantum awakening, quantum manifestation, quantum healing, quantum miracles, exponential business growth, and innovative products and services.
Well, it's a very, that's the hot topic in today's world. And I think that it really starts with the entrepreneur and the problem that they're looking to solve. I think, we've been through an era where we've seen a lot of free capital flowing. Entrepreneurship is on the top of everyone's mind. And I think that when it comes to attracting capital, people have to take a step back and really not focus on the capital fee or not focus on the capital piece first, but really look back into the business that they're creating, but more importantly, the problem that they're solving. And I think more people are so focused on raising capital and funds for their investment that we lose sight of where these real businesses start. And that comes from a founder being passionate about solving a problem. And I think those are the areas where people really need to focus their attention on, and further flush out what they're looking to do, build their team, and then really tell their story. Capital raising is storytelling, and the best capital raisers are the ones that are telling the right story, because they're bringing people on this journey and they're making people believe that they're going to create something special, but they're also maybe demonstrating some of their past history on how they can bring some of these investors along for the ride. So I really think it's looking back, and there's a lot of boxes that people need to check in order for them to be in a position to raise capital. And I think too many people jump the gun and just focus on raising the capital because, that's obviously, it's not really the fun part, it's the challenging part. But a lot of people really are reluctant to put or don't realize the amount of work that goes in to putting yourself in a position to be able to raise the capital.
Thank you. What are the best brand stories? What elements should a brand story contain, so much so that it heightens the desirability factor of a potential unicorn?
Well, there's many stories companies and or brands could tell. I think the first part is like, why now, right? Why is this relevant in today's world? Along with what type of problem this is solving, or why people, if it's a product and or a service, some people may know that not necessarily need this product or service. So why do they need this? What's the use case? And in most cases, it's how is it going to make my life better? We live in a day and age where we're crowded by all this online social media, networking groups, now all these different AI applications. It's endless. You can spend your whole day, on an AI chat box and in just digging yourself out of your email and lose sight of all your productivity. And so there's, the real focus is, how does this make my life better? And how can it also help me deliver results? I think those are things people look for when they purchase products. And it goes along with telling the story, but there really has to be a use case. And if the customer doesn't necessarily know that they need it, then who's ever creating this product needs to demonstrate why they might need this, and how this may, either help make my life better, help make my life more efficient, or, help put myself in a position of potentially more success down the road.
Thank you. How can a startup go from ghosted to funded in record time?
Well, it's not easy, but we live in a day and age where, the founder or who's ever raising capital really needs to have a strong mindset. So if you look around and talk with some of the best funds, best entrepreneurs, people are saying no all the time. You're going to hear more no's than yes. You're going to get ghosted a lot. I've been ghosted a number of times through all the ventures that I've done. That's just the reality. I think the mindset of an entrepreneur is you really can't take these things personal and you just have to move on. You have to understand that these things are going to happen and you can't let these things really overtake you emotionally, because that's when people really, potentially take a turn for the worse. It affects their emotional state, and it prevents them from sort of moving forward and chasing what they originally set out to do. But the real key is resilience. You have to be resilient, and that's a character you need in business too. So it shows in the fundraising process as it does in business. The best entrepreneurs are resilient. Many things are going to go wrong when you start a business. Many things are going to go wrong when you start fundraising. Those are just the facts of life, and people need to set themselves up for, going through these sort of, as you say it, being ghosted, not one, two, three, multiple times across their journey.
Thank you. Which negotiation game should startups play in order to keep top of mind for a potential investor and to turn the dynamic from being the ones chasing to being the ones attracting venture capital quickly? Well,
I'm not necessarily sure it's a game that they should play, but I think it's a matter of telling a strong story and creating, in the first place, creating a business and or product or an investment thesis that is going to be desired. And the other piece is that the best way to do that is to get out in the marketplace, understand who you're looking to go after and attract, who might be the right investor for the product, service, or investment fund company you're looking to create. Figure out where these people may be, whether they're at specific conferences and networking groups, and really get off your butt and get in the marketplace. So you need to go create that demand, and then other people will start finding you via word of mouth. But no, there is really no magic trick to just creating something and have 1 million people come to you. The crafting a great email and sending out these a lot of that stuff has proven that it doesn't work. It's really about getting into the marketplace, being able to articulate in a very short, construed way of what you're looking to achieve, and identifying the right people and building on the network effects of allowing those people that are identifying with you or looking to invest with you are going to tell others and bring them along for the ride.
Thank you. What are the best elements for a startup to include in their pitch so that a venture capitalist would remember them so much so that they would engage in a conversation about a potential investment?
Well, I think the first thing is someone needs to understand what you're doing and what you're about. There are too many situations when creating a deck or a pitch where people are confused. So you have to be able to articulate yourself and the problem that you're solving in one sentence. It has to be easy for someone to understand. That's the real key. If it's too complicated for somebody to understand, if it's too complicated for someone to explain, the likelihood of them remembering this is very low. And so there's a whole process of going through how you're able to articulate your product, service, idea, and investment, and how this potential investment, product, or service will benefit others. And you have to be able to do so in a really nice, tight format that's easy for someone to remember. So when they articulate it to others, they're comfortable explaining it. But if they're not comfortable understanding it, they're not going to be comfortable in explaining it. So that's something that we see far too often in today's world.
Thank you. What's the best procedure to go from, let's say, meeting you at an event and let's say impressing you with my pitch or the potential business that I have, and going from there to, let's say, emailing you and let's say being ghosted? What is a better procedure that an entrepreneur, a startup could follow to get better results and faster?
Well, there's many different paths you can travel, but the best path traveled is obviously in-person relationships. For first-time relationships, creating those over email or Zoom or video conference, it's very difficult to do. So I always, as an advisor to many businesses and entrepreneurs, the first thing I say is get off your butt. Get out into the marketplace and create relationships and show that you're authentic, because that's the first way of doing so. And then, Zoom and all these different channels can be used to maintain and build relationships. But I think the key is you have to ask. Email is obviously a very informal form of communication. And if you're meeting someone in person for the first time, you need to ask, when can I follow up with you? Can we host another call? Or can I meet you in person again? The best thing to do is go back down and meet that person again, especially if they're really critical to, as an investor or someone that could really help you along the way. But you're really just going to have to go out of your way and make an effort. Sending simple follow-up emails and some of the tactics that may have worked in the past are very difficult to execute on today. And so it's really the extra effort, going back and meeting them in person, or asking for a Zoom call and then being able to go meet in person. But that's really what it takes, and that's what we've seen from the people that are far more effective than the ones that tend to struggle.
Thank you. What's better, a one sheet or a large pitch deck for emailing for venture capital?
Well, as a first pass, a one sheet is always better. Less is more when it comes to making a first impression. I think if someone's really going to open your document for the first time, seeing a huge deck can be a challenge. You don't know what that person has going on, how much time they have. And so it kind of ties back to meeting someone the first time and being able to craft your pitch, explain what you're offering in one sentence or two. That sort of ties back. If you're sending something to someone for the first time, less is more from that aspect, but it requires more thought. It requires a lot of effort. Too many people have 9, 8, 10 pages, and some of the pages say the same thing. There's a lot of redundancies. And so it really requires, people really have to put in the work and understand who their audience is, what they might be doing when they're opening up their email. They may be looking at 3 or 4 other things, and what can they say to really grab that person's attention? And so that's what we see has been effective if you are sending somebody something via email for the first time.
Thank you. What are the types of elements that would be like a check mark of, yes, you did good in a pitch? What are the types of things that would be like, wow, this guy really did his research, or this guy really, really did this thing in his pitch that really impresses you? What are the types of things you want to see in any startup pitching you for investment?
Right. Well, the first part is ask questions. The way to really stand out is personalize your pitch, right? Are you just coming, many people come in and they're pitching things in a robotic, but every investor is different. Every person's there for different reasons. Every person's coming to buy a product for different reasons. So the way to really stand out is start by asking questions. What's their history with investments? What's their history? Pre-qualify them in a way where what you're saying becomes relevant to them after you've sort of, found out a little bit more information about them. And that really shows that you went through the effort to understand who they are. Do a little bit of research about them before the meetings, but there's all the tools that are out in the marketplace today to find out everything about everybody. And so it's almost inexcusable to come to a meeting and not understand who your audience is. So I think that's the first part in which somebody can stand out. And positive energy, just the little things of how enthusiastic are you about what you're selling or the investment that you're trying to sell to this person. I think those are a couple of little things that we've noticed that can stand out above and beyond of everybody, having a good pitch, having a good investment thesis. I think those two things are really the intangibles that separate, good from potentially the best.
Thank you. What are the types of startups you will never invest in? And generally, a lot of investors will never invest in because they're missing something very logical to you and not very logical to the startup founders.
Well, I mean, a lot of the time, it does boil down to the team, right? When you're investing at the early stage, when you boil it down to early stage investing, you're really underwriting people. So I use the 80-20 rule. And when you look at, late stage growth and public market investing, it is more about the business. CEOs, presidents, they come in and out, but the business is so static. It's about free cash flow generation. How, is this company undervalued or overvalued to its peer set? And so 80% of your investment thesis is sort of based on the business at hand. Maybe 20% gets allocated to who the team is at that stage. But in the early stage, it's just the opposite. Obviously, you need to know that it's a strong, this can be a strong business or they have a proprietary technology. But really what it boils down to is who's the entrepreneur in the team? 80% of that weight likely needs to go to who that team is. And so the product can be right, the market can be right, but if the team's not right, it's likely not right. And so the analogy, that people use is that, we'll invest in an A team and a B product any day of the week because that A team is going to turn that B product into an A product if it's right market, but if it's an A product and a B team, it's likely that team's never going to be able to recover and there's going to be some problems down the road. So it's really all about the team. That's really the most important part, where if you're a strong early stage investor, it's really hard to underwrite investment if the team doesn't feel right.
Thank you. If you have an A team of designers, like let's say software as a service, product designers, and they have no sales team whatsoever, is that a no-go in terms of investment until they actually manage to source that, the sales department?
Well, not necessarily. I think, look, every business has to start somewhere. So it's all about what their plan is. And they might not have that team. The product might be amazing and the core team might be great, but as long as they have a plan and or a path to how they're going to acquire those people at some time, I don't think it's something that you can dismiss. But that's where, really, the hallmark of a great early stage investor is sort of, you have to have this futuristic view, right? It's more about what you have to project and see, okay, well, what's going to happen down the road? But then in order to qualify a strong entrepreneur, you want to understand that this person has the vision, or they can see where this is going, what they're going to need. Obviously, there's going to be some stumbling blocks down the road. But if that core team has the right connections, they know where to go to, and have the ability to acquire those people and build a winning team, by all means, that can be a still attractive investment at that stage.
Thank you. How can entrepreneurs leverage AI to attract investment?
Well, that's a great question, because a lot of people are, using AI to, it's become this tool that you can use to find new people, source new networks. So I don't know if AI is an answer to just finding new investors. I think AI is a tool that you can use to potentially help you understand the right type of investor for you and where you might find these investors, because that's really the key. Is it can help you really qualify things and really speed up the process of doing the research. AI is never going to just land you an investor right at your lap that's going to want to invest. But it's a tool that you can use as part of the process to be way more efficient with your time, and then spend the time to go out and meet with these people. Previously, the amount of research and tools that were available to go try to find these types of investors or where these conferences are at would take teams of people and a lot of time. Now if you look at where AI is and how powerful it is, and this is something that have just made everyone's life more efficient. And so it's really utilizing this technology to be more efficient so that you can spend your time in the most important areas, right? And the most important areas are the ones that are going to deliver results. And if you're looking for investment, the most important area is getting, just like in business, always want to get in front of your customers. And in this space, you want to get in front of your investors. So it's really using AI as a tool so that you can spend more time getting in front of your investors.
Thank you. What are some traction results that startups should have in order to become investable?
Well, everyone has different metrics. I think, there's pre-seed investors, there's seed investors, then there's Series A investors, and all those investors are going to have different criteria in terms of what they look for. Pre-seed investor is pre-revenue. So, they're going to look at the team and the product that they're going to build and validate that this team has the capabilities to build the product. A seed stage investor is probably going to look for some product market fit, a little bit of revenue traction, talk to some customers that are using the product. A Series A investor is going to look for growth. And so I think those factors differ across where you're investing, but it is really important to stick by that set of criteria, depending on the stage that you're looking at.
Thank you. Is it important that you find an investor that matches your vibe as a founder of a startup?
Well, I don't necessarily say vibe. I would say strategic investors. And look, this has always been the issue for entrepreneurs. And it's something that, I've had many conversations with entrepreneurs that I mentor and advise. And it's in today's day and age, it's so hard to raise. I mean, who's going to turn down money? So it's hard to turn down a check. And the problem is, sometimes it's quite obviously that this doesn't feel right? This investor is not the right person for me for various reasons. But when it's really hard to raise capital, sometimes the entrepreneur turns a blind eye and takes on that investor. And so my advice to them is have the tough conversations with that investor. Really explain. And that comes along with, you'll know when the investor is right or wrong if you explain to the investor what you're looking for. Don't be afraid to ask for help. Someone's investing with you because they believe in you and they believe that you can produce them a return. But your best entrepreneurs ask for help. They know how to identify investors that can help introduce them to people that have a specific expertise. And so it's really identifying, the entrepreneur needs to understand what, where their weaknesses might lie and how their investor base can help them overcome some of those weaknesses and turn them into strength. But the real question is just having those tough conversations with the investors to really understand what they're willing to do to help. And it's, it's something that people don't spend enough time doing. And it's hard. It's not easy in a day and age, like I said, when it's hard to raise capital and capital shows up. Most people just want to accept it and ask the questions later. And sometimes they regret it.
Thank you. How can genius startup founders with no communication skills, no branding and marketing awareness, how can they attract venture capital?
Well, it's hard. You have to surround yourself with a team. Again, it goes to, sure, we're in a day and age now where you're seeing, one-man bands. So, there's smaller companies starting with AI and technology. Solo founders do exist, but solo founders are unique. They have to be strong in such a variety of skill sets, right? So, a founder that has technological expertise, what they really want to do is, the best thing that they can do is try to find some partners. And that's not easy at that stage, but bringing in partners to help complement their skill sets that they may be missing is extremely important, because in the early stage, fundraising is important. It takes up a lot of time. There are so many things that need to be done when starting up a business, that you really need to make sure that if you don't have what it takes to, or have that experience to do everything yourself, you really need to take a hard look at it. And the other thing is, the best thing I could say is get advice. Go to someone that's close to you or an advisor, and don't be scared to ask for advice or help. I think that's something that people are, there's a large majority of people are scared to ask for help. They think it's, they think that people perceive that as being negative in a way, but I think just the exact opposite. I think it's a position of strength when you know what your weaknesses are, your shortcomings, and you're going to ask people of what they think and how you may be able to help yourself by overcoming something that you might necessarily be strong at, or someone can help you find someone that might be able to assist you in that way.
Thank you. Tell us 3 case studies of companies you've invested in and what impressed you about them.
Well, I think a couple of things. Without naming names, I think most of the case studies that we've seen with these entrepreneurs is that really, even with some of these technologies, it's really started from the customer. They've recognized a specific problem that they went and set out to build technology that addressed that problem. And I think that's really impressive, because it's not easy. It's actually very hard. Most people are developing the technology and then they're trying to retrofit it into the problem. It's like fitting a square peg into a round hole. It's very hard to start with the customer. And then, but that's really where it's got to start. You have to understand what the solution is, and then you have to go build it. So that's something that we've seen with many of our founders that's really impressive to us. The other thing is, everyone in today's day and age, they talk about the pivot. The pivot's been the founder that gets in there, has a thesis, and things don't necessarily pan out the way that they want, but they've been smart enough to sort of keep moving in direction and following where the opportunity does, and then it leads them to something bigger. And so those are all really impressive entrepreneurs. And what's impressive about that is it ties back to the investing landscape that we're in right now. The world is moving so fast. Technology is moving so fast. The thesis that you have today may be outdated tomorrow, and tomorrow could be, 6 months, 7 months, 8 months from now. And so it's the ones that have an open mind, the ones that have a strategy and a plan, but they re-strategize and replan once they see that there might be a better way to do something. And so I would say that those are the 2 really impressive traits that we see within many of our entrepreneurs.
Thank you. How can companies integrate AI in their operations, automations, or attracting customers so that through doing that, they can attract more investment capital and be worth more?
Well, just integrating, it's a big buzzword, right? So everyone's now, it's funny because everyone's still got to use the word AI. There's a lot of people that still, the usage is growing and still being adopted. But at one point down the road, everything's going to be AI. And, it's like the internet. But it's something that every company needs to do. If a company is not utilizing AI right now, then they're well behind the curve. But what a company needs to do is they need to integrate into their business in the way in which every business is different, right? And so you have to look at AI as this incredible tool that create efficiency and scale. And so it does require someone having full command of their business and for them to look at areas where they're inefficient and where they have had trouble scaling. And those are the areas where you start to, how can we use AI to build efficiency and scale? How can we use AI to work for us 24/7? People are always scared that AI is going to replace humans and, to me, I think AI is incredible because the way to use it is AI is going to replace the jobs that people don't want to do anymore. And if people weren't doing those jobs, that means they were probably giving 50% or a half-ass effort. So now you have a tool that works for you 24/7 and it's working, giving you 1,000% effort all the time. That's an incredible for business. And so there's no one way that every way a company uses AI is going to be different, but you really have to start and have full command of your business to know where this technology can really help you as a starting point.
Thank you. How can entrepreneurs who may need investment reach out to you?
They can visit us online at ventureforwardcapital.com. We're in the process of finishing our Fund 1 raise over the course of the next 3 or 4 months, and we're going to be looking at launching a Fund 2. We're really excited about the landscape. We're even more excited about what this world of vertical AI has to offer. We see it as an incredible opportunity of embedding really AI into business models that become more defensible with their technology. But people are more than happy to find us online and they can email us and we're happy to talk with them.
Thank you.
Follow us for more interviews with world's most influential business titans, providing you with the insights to awaken to your full potential so you can get paid to be yourself, find true happiness, and manifest anything you desire.